Hello and welcome back to episode 48. Holy cow. Episode 48. Fixing the effing mess. And the F stands for financial. It stands for financial mess. After the holidays, but in any time if you have financial mess, we're going to talk about just how bad that gets and how frustrating. No, I'm not going to talk about how frustrating I am. Just how bad it is to have a financial mess and to not know your numbers, because if that's you, the damage is probably far worse than you already think it is. So we're going to talk about that, and I'm going to give you some real life examples, so to speak, of what I live every single day in terms of looking at other people's books and wondering how they're running a business with that shit show. And then we're going to talk about cash flow, and then but really like how to fix it, how to just do it right. So that's what we're going to get into here. See, it sounds like a lot, but we're going to simplify it way, way, way down. And I'm just going to lecture you a little bit on this with examples, with real life examples. So when I'm talking about, or what I think of when my marketing director puts in front of me, hey, I want you to do a podcast. And I just did a webinar on this. I think we have a newsletter, a blog on this, but all of it is around fixing the financial mess. The first thing that comes to mind are all of the clients not clients, but potential, future clients that literally, these are leads that come through and pay for a deep dive call with us. Me, specifically, I've been doing a lot of them as my staff's been really busy doing the work. So I stepped in, started doing our deep dive calls. And when we do them, we include, the reason why they're paid is we do a full-on diagnostic financial review for them. So here's what happens. Typically, is most people are using QuickBooks Online. Some are using QuickBooks Desktop, and we tell them the dangers of that, because that's going away. If it isn't already, it's basically gone, and they're going to have to go to the online version no matter what, unless they completely switch softwares, which is, maybe a topic for another day, maybe not a topic I'm going to talk about. Because we just use QuickBooks Online exclusively now. Not because, we get any type of profit sharing with QuickBooks. Of course, we get nothing from them. As a matter of fact, we pay them tons of money. It's just because it is the most widely used. We're all certified in it. We all, meaning myself plus my 10 employees. And if we had to learn various amounts of softwares and all of the bells and whistles that go with them, we just wouldn't be very good at our job. So we go down dirty and deep with QuickBooks Online. Like I said, we basically could code that software. So that's what we use here. If people come to us with desktop, we just let them know, you can do whatever you want. You can stay with desktop. QuickBooks is going to make you go. And I know this for a fact. One, it's pretty obvious. You can Google it or whatever. But we speak with some of the higher ups over at Intuit, just because we're one of their bigger clients with them. So we have these different type of group calls, etc. And they say flat out, yeah, they keep raising the prices of the desktop, not even just to buy it, but now you actually have to buy a subscription that goes with the desktop. And they're only raising the price to get people to stop using it. It's kind of a weird model, but a common one. So that I know for a fact they're trying to get people away from it. So usually we tell people you're just going to have to convert. I will say that QuickBooks has made it very easy to convert from desktop to online. Actually, even if you have lots of data, even though it might say it takes a day or two, it actually usually takes like less than an hour. And then here's the only thing is that this is a little side note. So if you are QuickBooks Desktop and you're going to go to online because you have to, when you do that quick, easy conversion, you are going to want to re-reconcile all of your accounts from the last time that you did it. So just say that in the desktop version, you've reconciled through November 30th, right? You're going to go into the online version after you import everything over, and you're going to go in, you're going to just re-reconcile November 30th again. Because what you might see is QuickBooks likes to make these journal entries to open a balance. It's not correct. I just think it's the only way QuickBooks knows how to tie things out. And so if you go in and usually you delete that journal entry that QuickBooks puts in there, you're going to balance right back to zero and you're going to be great. That's what we have found time and time again. Usually you'll just see it. It'll look outlandish. It'll look like not something that you put in there. And usually it's one journal entry, which brings on a new balance for your bank account or your credit card or whatever it is you're reconciling. And the offset will be to opening balance equity, which is on your balance sheet. And if you just remove that, you should be good to go. Now, all of that is considering and assuming that you have really good books to begin with, that you were doing a great job in desktop and everything was tying out perfectly. That's all the assumption I'm making when I say that. So here's what comes to mind. We recently, oh boy, I know, I think I'm gonna vent on this one. Had a client come in, a very busy pizza place on the other side of the country, doing really well. I mean, revenue wise for the size of the place, we're doing great. Books, absolute mess. Books made no sense. They were, I would say, in the top 5 worst sets of books I've ever actually seen. So I don't know how they have been operating. Oh, I do know how they've been operating, but it's staggering how bad it is, because if I owned this pizza restaurant that was doing, $1.6 million and, at a decent occupancy cost and everything else, I would be legit in those books, tying them out so that I can maximize the profitability, the heck out of that place, and maybe open more or whatever I want to do, or maybe pocket the money and go on vacation. I don't know. But I mean, I know if I have a 40-seat pizza restaurant and I'm doing that kind of money and I have my occupancy, my other overhead's low, I should be making a lot of money. And that was not the case with this pizza place at all. And I think it's only because they just didn't know. So when you're operating your business out of bank balance accounting, right? That's what we call it, is when you literally are making decisions based off the balance in your bank account. That's when you get into massive trouble. But not only that, because I don't know if they were doing bank, I'm assuming that they were doing. I'm not going to flat out ask them that, at least not yet anyway. The books were so bad, and I don't think they realized. I know that they did not realize how bad they were. That if they were making any decisions based off the books, they were making them completely wrong because they were so horribly bad. And I'm talking about, there was duplicates and triplicates of some transactions. Then there were missing tons of others. I'd like to think those two would net out, but they don't. Literally, they should have been rebuilt from scratch. But the thing is with this, especially with this, and it's not the first time I ran into it, but it's been the first time in a while, is that the spouse of the owner operator of the restaurant was doing the books. And I don't know this for a fact, but I would bet money that the spouse does not have any type of background in bookkeeping or accounting, based on what I saw in there. And therefore, that's why it was wrong. And I don't know why you would have somebody that does not have a bookkeeping or accounting degree doing your books for you when your livelihood is at stake. But my guess is they thought, how hard can it be? Right? And here's the thing. If you know what you're doing and you understand GAAP accounting, right, generally accepted accounting principles, and you understand how a balance sheet works, how a P&L works, and how the two work together and don't work together. If you understand all the different components that it takes to really understand financials, then yeah, absolutely have your spouse or your cousin, your whatever, your cat do your books. But when you give it to someone that doesn't understand all those moving pieces, they're going to create a massive shit show. And that is exactly what we saw here. And I think that's what got them into such a deep hole, is because there's no way they knew what they were doing. So they came in, we did a ton of work to clean it up. It took a ton of work to clean up the set of books. We're not even done yet, but they asked us to stop and they're going to move forward. And that's actually kind of scary. It's almost to the point where I just want to even do them for free, because I'm not sure I can sleep at night with the fact that there's a restaurant out there operating without a clear set of financials, a strategy and a structure on a way to go. It's literally, they might as well put blindfolds on every single day. I don't understand it. So having good financials is absolutely key. here's a few things. This is not for me to be salesy, but hiring a bookkeeping firm that is familiar with restaurants is number one. That could be anyone. That may or may not be Spark. We're not the cheapest, but there are firms out there that I'm sure are much cheaper that could probably do an okay job, or certainly better than someone that's no idea what they're doing, to give you accurate financials. And here's how you know. I think we have a whole separate podcast. I think, or certainly I know we have a whole separate something on what you should be asking and getting from your bookkeeper. So you can look for that. But really, you can probably find a fairly inexpensive, maybe, a few $100s a month, pay for a bookkeeper. And then all you need to do is ask them every month to send you a recap, preferably a video, a screen share video. That's what we do. We walk them through their balance sheet and their profit and loss and have them just kind of high level explain what's happening in each one of those. If they can do that, then they should know what they're doing, because that would be kind of hard to fake. Or meet with you, even better, if you're willing, meet with you every month or every quarter, or at least twice a year. But I would say every month if you can, or every quarter, and then ask questions. You as the business owner are not expected to understand how a balance sheet and a P&L work. That is not your job to understand that unless you owned a bookkeeping or accounting firm. So your job is to, fly the plane of your business, but have people in the background supporting you, saying, hey, here's what this means. Here's your balance sheet. Here's what it means for you. Here's your P&L. Here's the story it's telling us. Here's where we think improvements can be made. Here's where you're knocking it out of the park. That's what you want your firm to do for you. So, I mean, if that's not you or anyone you know's forte, their expertise with lots of experience in restaurant bookkeeping. Restaurant bookkeeping is completely different than bookkeeping for any other type of business out there, especially a service-based business. It can be a little similar to retail in some ways, but not in all ways. And it's certainly completely different from construction, from service-based, from anything else like that. Restaurant bookkeeping is very specific. And one of the main reasons why you want someone who's experienced in that is because that's how you're going to get it to tell you the numbers and the percentages that you need to know on a regular basis. And and the way the books are done is going to give you those numbers, those prime cost numbers. What's your food cost? What's your liquor cost? What's your beer cost? What's your wine cost? What's your labor cost? What's your kitchen payroll? What's your front of the house payroll? What's your management staff? Like all of those things, because those are all the different levers that you can pull up or down to help profitability and drive it in your business. So, if hire someone that knows restaurant accounting. If you have someone that is good at bookkeeping, but not sure about restaurant accounting, we offer the RACC, that's the Restaurant Accountant Certification course. We offer that. They can go in and they can buy the course from us. Again, I don't mean to be salesy, but I designed it for all of the bookkeepers out there that would love to service restaurants, but don't have that specific skill set that is absolutely required to do the job. So we offer it so they can do that. They can get that through our website. If you know someone and you just want to be better, have them take the course. It is an online course. Everything is recorded so they can take it at their leisure, or you can have them finish it in a couple of days. And then they also get the support, the backup support, if they ever have any questions, right from us. So it's a great way to go if you already have somebody in place that just needs some help doing it right. But back to my example, because these books were so bad, and actually it reminds me, the books about this pizza place I'm talking about remind me of the story that I wrote about in Profit First Restaurants, which is the Burger Shack, which is a story that is the number one. It's the number one story that people comment on when they send me, usually DMs through Instagram from around the world. Sometimes they'll send me an email about, how sad that story is, but it's the one that resonated the most, etc. It's very similar. That Burger Shack, if you haven't read the book, and the guy, when he came to us, so excited to come to us, excited about Profit First, loved his business, just couldn't figure out why he had to keep getting, this mafia money and, and all this debt because it was never enough money, didn't know why. And, long story short, come to find out, his food cost was running out I think it was 58% or something ridiculous. And in his mind, in his head, not even his books made no sense anyway, so why look at them? They were such a mess. But in his mind, he thought he was running 30% food costs because that's, what he heard out there in the world and just assumed that was him too. But when we actually, counted the math out, did the pennies, it was 58%. And that's why he was in such a hole. And he'd been running at that for so long that he dug the hole way too deep to get out of. And we had to advise him to close, which was a horrible, sad thing to do, but it actually saved him. And a couple of months later, he let us know that it did save him. So it ends well. He's on doing something else now. But this is what reminds me of this pizza place. Although this pizza place is not in the hole he was at all. They have not incurred that much debt. Very little. I think they've been paying it because they just haven't been paying themselves. So we can turn this one around easily. But thank God, if they let us, right now they're just sticker shocked by what a cleanup costs, which is like another little thing when it comes to pretending like you can do the books yourself. Or hiring someone that doesn't know restaurant accounting but says that they do, or says they'll give it a shot, or how hard can it be, or etc., and then messes it up. In order to fix it, it can usually cost 3 times as much as it would to just do it right in the first place. So looking back at this pizza place, I feel like we probably should just recreate the books instead of cleaning them up. But there's no way for us to know it at the time. I'm just going to pin this in my head for the next time some massive bookkeeping mess comes our way. We're probably just going to start from scratch and make it beautiful going forward, because trying to fix this one has literally been an absolute nightmare. I had no idea how bad it was until you start digging in, and I think that's what gave them sticker shock. But if they get it completely fixed, we were probably 85% of the way there, then they'll have really clear numbers. He, the operator, will know that, his food cost is not at whatever he thought it was. It's certainly not at what a pizza place should be at. I think he was running around 37.5% last I looked, if everything was in. And that's too high. So he can make decisions right there. Oh my God, either I need to really raise my prices if I haven't yet, or I need to look at my purchases and where the food is going that I'm buying, or I need to look at my menu and maybe take off these items that are selling that I make no profit on, or a combination of all three usually. But without knowing, hey, there's a problem here. Your food cost should be 24-25% as a pizza place. Presumably, not everyone, but overall, you're good at 24-25%, or sometimes less if you're, depending on the market you're in, and you're running 12 points too high. That's your entire profit margin. I'm sure he has no idea because the books were awful. So that's what we want to do. The whole point of this podcast is fixing the financial mess. When I'm recording this, it's the end of the year, right? It's January. So we're going into our year-end closeouts now. If you aren't already working with someone or doing a great job on your own, closing out every single month as you go, you have to close out the year because you can't do your taxes without the year being closed out. And if you're thinking you don't really want to think about it right now because you're going to go on extension, just letting you know that an extension is not free. Extensions are not free. When you go on extension with the IRS and their state for your taxes, it costs you money to do so. And that's something that people don't often know, but if you think about it, it only makes common sense. If everyone in the world has to pay their taxes by April 15th, not in the world, in the US, pays their tax by April 15th, assuming you're a pass-through organization, then your taxes are due April 15th. But you're allowed to go on extension to October 15th. Why on earth would the IRS be like, yeah, just kidding, you don't do April, you can do October, and not charge you for it? Like, that's a horrible business model. And you can think what you want about the IRS. They are not dumb in a lot of ways. So no, it's not free. If you owed money on 4/15, even though you didn't know that until August when you got around doing your books, it was due on 4/15. So now you pay penalties and interest on every day starting 4/16 on. So it's not free. The only time it seems free-ish is if you have a massive loss. And even then, sometimes you're still going to pay penalties. So our clients here, we do everything in our power to have them file and pay on time. Always. If they're not, it's usually because they have other things going on, or they just don't want to file on time. That's completely up to them. But overall, I'd say about 90+% of our clients file on time. And the only way to do that is to have really accurate books. But that's just for tax purposes. For all businesses, but especially for restaurant businesses. You want to have accurate books. I'm going to say every week. And if you can't do every week, then absolutely every single month. So you can pull those levers. You can know where you're at. If you're running at a 40% food cost when you should be at 30% or less, now you know what you should be focusing on. And the same with the labor. If you're running at a 52% labor cost, but you're thinking, oh, my point of sale told me I'm only running at 36. Sometimes if you're using a point of sale for your payroll, like Toast has payroll, like Home Base, Square has payroll, sometimes that doesn't capture the full picture. I mean, it depends on how you're posting it in your books. Sometimes the full picture, so it's misleading. Oftentimes we're seeing that Toast payroll say, oh, my payroll was only this. But when we pull all the pieces together and really tie it up in your books and have the actual come to Jesus moment, it's going to be more than you think. So that's another reason why it's so important to have your books completely cleaned, exact. We remodel them so they're simplified, a simplified way to look at them. And then you can make the right decisions for your business going forward. I can't emphasize enough how important it is to have good books. And I'm just so shocked at the amount of businesses that run with messy books or no books at all. And oh God, that just drives me absolutely insane. If there's anybody listening to this, and I truly mean this, if there's anyone listening to this and you or someone you know doesn't have a clear set of books and you have a good reason why, I'd love to know, because maybe there is another side that I'm just not seeing. Obviously I stay in my lane and I know my side of it. I just can't for the life of me try and understand why a business would ever think it's a good idea to run without knowing exactly where every dollar is going and constantly focusing on profitability. All right, let's put that aside. Because we're at 22 minutes and I wanted to talk about cash flow. So I'm just going to do this really quick, cash flow projecting. You can Google, cash flow projections, templates, all you want. You'll come up with 1,000. I did it earlier this morning. You'll come up with 1,000 of them. I hated every single one of them. I thought they were way too complicated. I didn't even want to look at them. This is what I do for a living, so I can imagine if you want to look at them. Here's what we do here instead, as at least to start as a cash flow forecaster. And it's important now because like I said, we're just starting January, and especially where we are here in New England, January and the first quarter and part of the second quarter can usually be very slow months. Where businesses can endure debt if they didn't save for these months, et cetera. So we really want to be tight on our cash flow. And the way you can do that, if you're using QuickBooks Online like we do, and if you have a point of sale and you have it mapped to QuickBooks, like so many do well, not all, but so many do well, where it's posting your sales either daily or weekly. What you can do is you can run a monthly P&L. Maybe you do it for, I think I just did it for November, which was a good indicative month of an average month for this restaurant. I had the P&L sorted weekly, collapsed it down. So I'm not looking at 1,000 different accounts. I'm looking at maybe 5 to 10 accounts. Export it to Excel. So now I have this new weekly P&L. So at the top, I have my revenue. Toward the bottom, I have all my expenses, and I just turn that into my cash flow forecast. If I need to change the revenue based off what I think the weeks in January will bring in using historical data or whatever you believe, then I can change that at the top. I can add back in sales tax because obviously that's revenue collected. And then at the bottom, you want to take that out saying sales tax paid. And you can just finagle a very simple cash flow projector using historical data and a simple spreadsheet to give you an idea of which weeks you're going to have more money coming in than you do going out, and which weeks you're going to have way more money going out than you brought in, and what that might look like at the end of a month. Because usually it takes, especially if you're getting like the average of net 30 days with your food or liquor or beer vendors or whatever, usually you want, at the end of 30 days, you want to know, am I going to be up cash or am I going to be down cash? And that's what this does for you. If you want more information on that sheet or what I can create for you, just send us a message. I'm happy to send you what I've created. In the meantime, we just have a simple checklist that you can go through to close your year end. You can also use it to close your month end, to do some quick cash calculations so you can see, hey, do you have enough money to get through January, early February or not? What's the delta and how might you cover that so you're not running blind, running stressed through the month of January or whatever slow month that might occur in your business. All right, so that was a lot. It's 25 minutes. I like to wrap this up quickly, so that is exactly what I'm going to do. Again, I'd love to hear from you about this episode or about anything really, and would so appreciate it if you could share, especially even subscribe to this. It really helps us get in front of more restaurateurs, which is why we're here. So thanks so much. Have an incredible day. I'll see you on the next one.